my God! Okay, it's happening. Everybody stay calm.
What's the
Everybody
procedure,
stay calm.
everyone? What's the procedure?
Stay calm.
Hello everybody, this is Clayton again, and I want to make a quick video on the Dow falling today. And I've seen a lot of people on Facebook groups that I'm on and things like that kind of freaking out and just really being worried for this drop. I want to apologize beforehand if you guys hear any background noise. It's late on a Monday and we're doing dishes and the dishwasher's running. You shouldn't hear it, but just in case you do pick it up, I apologize. But the main purpose of this video is specifically for dividend investing, but for anybody in general. Yes, there was a drop of 1,031. I think it was like 0.61 or something like that. I have it on Seeking Alpha. Let me see. Yeah, okay. So 1,031.61 is how much the Dow fell. And that sounds like a lot because it is. And when you look at the three largest in history, it actually now falls as the third largest drop ever in the history of the United States when it comes to net change. But, and this is a big but, that isn't that severe of a problem when you look at the actual percentage of the market. Only 3.56% of the market was lost today. And I know for people that do day trading or anything like that, today was a big day all over the place. Some people made a lot of money and some people lost a lot of money when it comes to that specifically. But for a dividend investor, which is myself and hopefully anyone that's watching this video is interested in, it had a little bit of loss to me, but as you notice something, my dividends don't go anywhere. So yes, I had a market, I lost $22. I'm now in the red, $22.12. But I'm still earning $9.81 of those dividends that I had earned to this point. So currently I'm at a loss of $12.31. This is though the reason why I really like dividend investing, because regardless of how the market kind of shifts and moves, the dividends are not affected. And yes, it is very possible that in the coming months, that Carnival Cruise Line, which is one that we know I picked up recently in a recent video, that they may cut their dividend because their sales are down. But it's not likely. When you looked at their other situations in the past when it came to SARS and similar, when it came to losing revenue, they didn't cut their dividends. So I don't see them cutting their dividends for it. And that's why this drop does not freak me out at all compared to what I've seen through other Facebook groups like I was mentioning. And there was a quote that Warren Buffett said, and I actually have a video that I want to pull up of him a little bit later to show you as well. But he stated something in an interview today with, I think it was CNBC. And he said, as a company, he's talking about his company, we're buying businesses to own for 20 or 30 years. And that's what it is with dividend investing. I'm not buying a stock to sell tomorrow or next week or in 2 weeks or a month or even a year. So in my eyes, or in the eyes of the investor, if the value of the company hasn't gone down, then there's no reason to sell it. Nothing has changed. Yes, there's an illness that's broken out, and unfortunately it's affecting the markets drastically because there's a lot of consumers in China and a lot of products are made in China, and it's starting to spread throughout the world. But the last 24 to 48 hours of the stock market doesn't change my investment strategies or the investment strategies that you should be doing. When you're investing in a stock, it's not for a quick fix. It's meant for the future. At least that's how I invest. I can't speak for everybody. Again, I'm not a financial advisor. Just please, if you're going to take my words of advice, just do your own research. But that's how I invest. And I wanted to pull up with the coronavirus. We see that it's very, I guess you can say quickly, spreading throughout the world. And there was a few new cases. I know South Korea, Italy, and Iran were the three that got verified cases over the weekend. So that's why everyone was expecting a drop. But as you can see on the map, it's slowly spreading. And here's the list of all the countries that have had it. What are we at now? We've got a decent amount that have had it, and it's going to continue to spread because from what I'm reading, they don't really have an antidote for it. They think they're coming up with a vaccine for it, but I've heard anywhere that it may go till the end of summer, middle of summer. So it's going to continue to spread, and it won't surprise me if the market gets hit by this. Now, some people during this kind of market feel that it is the best time to buy stocks. And I'm not against that at all. How I work with them in finance, as you know, is I have it where when I invest, it buys for me. I don't tend to invest money before my periods unless I have money that I can just throw in there. Currently, I'm not sitting on anything that I want to put in there. I know obviously Carnival's down, and I know 3M's been down for a few weeks now. Disney was down today. There was a bunch, basically everybody on the portfolio was down except for, I want to see if I can pull up today specifically. I think even IBM was down today. Yeah, IBM went down. Basically, everybody went down today. There was nothing that was pretty much safe that I hold. I think bonds were the only ones that really were okay. Yeah, they stayed constant. So that was my biggest thing. I know people are worried and people are stressing out about this, but the easiest way to look at it is, again, it is only a 3% drop today, 3.5 if we want to be more specific. And yes, the amount that it dropped seems drastic, but it's minimal. There's been a lot of 3% drops when you go through history. It's not even something that's really documented all that much because 3% drops aren't that drastic. It's just when the Dow is as high as it is today, you see such a large chunk fall off at 3%. So looking back, I was looking at the crash of 1987, and then was only a 508 point drop, but that was 23% of the market. So that's how you have to look at these things. Don't be as focused on the amount that the Dow drops, because the market, if you look at it specifically, all it did dropping today was get back to, I think it was December is where it was when it was last at this figure. Let me see. No, sorry. Yeah, it was December. Yeah, roughly around December is when. So 2 months ago, it's back where it was 2 months ago. So yes, you're going to see it's the lowest it's been all year. It's lost money this year in 2 months now. But I wouldn't stress if I was you. I can't speak for day traders. I can't speak for anyone else besides myself as a dividend investor. But to me, this is nothing. It's just a blip on the map. It was going to happen. It couldn't keep going up. There was no way. And I wanted to kind of end this video on Warren Buffett talking about, let me get over to the video. He was talking about why he isn't going to be selling stocks during this decline. And I kind of just want to let him talk. For those who don't know Warren Buffett, I don't know where you've been. I don't know if you're living under a rock. He's kind of the guru in a lot of people's minds when it comes to investing. And hey, I'll let him speak for himself.
Warren, again, for people who are just waking up, they're tuning in and they want to know what you think about this sell-off this morning. To see the Dow down 700, 800 points in the morning, what's your reaction when you see something like that?
Well, my reaction is that I like to buy stocks, so I don't wish ill on anybody else, but I like if they want to sell them to me cheaper, I prefer it. So if that's roughly a 3% decline or thereabouts, I don't know how many 3% declines I've had in my lifetime, but there have been a lot of them. And I can't think of one that you shouldn't have bought on. Basically, that doesn't mean stocks are going to go up or down next week or next month or next year. But if there's something, if you like to own American businesses, you're getting a chance to buy it 3% cheaper. I don't consider that a lot cheaper. I mean, but how can it be bad news unless you have to sell stocks? Now, if you have to sell them for some reason, you're worse off. If you don't have to sell them, I mean, somebody can come around and offer you a quote on your house today, and it can be 2% less than they offered you yesterday. But if you like the house, it really doesn't make any difference to you.
Does that mean Berkshire will be buying stocks today?
Well, we certainly won't be selling, and yeah, we could easily be buying something, sure.
So he touched on something there that I kind of think is the perfect analogy. Stocks are essentially like owning property when it comes to that. They're not something you're buying, again, speaking for myself when I say you, they're not something I'm going to be buying and reselling quickly. They're something I'm buying and holding on to basically as an investment, as they are. And for me, letting the dividends grow, reinvest. And then as I get older, start to be able to use those dividends for things such as bills and expenses and things like that. But I have no intention of selling. So if somebody comes up to me and tells me my house is worth 5% less today, yeah, that sucks that my house is worth 5% less today, but I'm not selling my house today. So I do not care. Now, when it gets closer to when I do want to sell, what the value of my home is, that's a different story. But for me, I'm 30 years old. It's going to be 20, 30, at least 20, if not 30, or later years, till I even think about really selling all of these stocks. The only time, like I've mentioned in the past, is if they cut dividends. Different story, that's when I'll sell. And obviously, if the market continues to drop, then it is possible that you'll see a dividends cut. But we haven't got there yet. And looking through their history, when we've had other recessions, most of, if not all of the companies I've invested in did not cut their dividends when they were going through rough times and this country was going through the hardships that it's gone through. So that's why I wanted to tell anybody that's watching this video, do not panic, do not freak out. It is not something you need to be worried about. Obviously, watch it. Watch your stocks individually. It is a very good time to buy some stocks. It may take a few more days of dropping. I'm no expert. I'm not going to tell you how the market's going to do. If I was, then dividend investing wouldn't be what I'd be doing. I'd be a day trader and I'd be retired by the time I was 31. Being that I'm 30 now, I'd do it for a year and retire if I knew exactly what the market was going to do. Nobody does. People can predict, people can guess, people can assume what they think is going to happen. But for me as a dividend investor, I'm just going to sit back, let the dividends keep going in, keep putting in my semi-weekly deposits, which, by the way, people asked why I did that. It's when I get my paycheck. It's the easiest way, just kind of looking at it as another expense that's being paid or something coming out of my paycheck like a tax. Just go straight in my account. I don't see the money, so that I don't need to think about spending that money. Simple and easy. For me, that's the best strategy. But again, don't worry, don't stress. This is going to happen. It may continue to drop. It may fall another 1,000 points. It may fall another 600. It may plummet another 7,000 or 8,000, though I would be shocked if that happened. I'm just pulling numbers out of the sky right now. But there's no reason to worry, especially if you're doing dividend investing. Just sit back. If you want to put some money in to purchase some of these stocks that you really like, Carnival's one like I was talking about. If you feel like, hey, this is the time to pick it up. If you like it, for me, it's something that I like for 15, 20 years. I didn't buy it because I liked it for 5 years. So if it continues to drop, though I usually don't put money into my account, I may put some extra in there just to pick up some more Carnival cruise line stocks, because I'm holding this for 10, 15 years. The virus, though it's being a problem globally, isn't going to affect the business of the cruise lines 5, 10 years from now. At least we would hope, unless the virus becomes something nobody can predict. So it will increase. All of the stocks that I'm holding will come back. They'll bounce back. So again, just sit back. Do not stress. Don't let the news articles you see and the media and people you see on Facebook that do day trading that are freaking out about this, don't let this eat at you. Just relax. Be careful. And I say be careful, meaning just don't overreact. And yeah, that's right. It was a short video I wanted to make touching on it today. And I hope everybody stays calm. Nothing to stress about, nothing to freak out about. And I hope you guys have a great rest of your evening. And I look forward to talking to you next time.